And I think this is what led to a lot of the confusion and a lot of the frustration when we have these corrections that we've always had and will continue to have, is when people go all in on something because they anticipate that it's going to go to the moon within like the next week or something. We're going to see periods of frustration if there's a correction in that time period, because if you are all in, you haven't left yourself any money on the table. So like I know I've been saying average down for months and months now, but if you're all in, you don't have the money to average down, or if so, you can't do so effectively. So I had a few questions after my last video, and I wanted to address something because I know that there's been like some tension between like some different communities, and I wanted to address like the main question because I saw a lot of people saying that, okay, well, I'm not investing in this crypto. Should I be all in on Dogecoin, or I am all in on Dogecoin? And the question came up as far as in the comment section in the email saying that, am I all in on Dogecoin? And I've said this a number of times, but I wanted to clear it up that I'm not all in on any stock, any crypto. And for me as an investor, that doesn't make sense as far as for overall market trends, different innovations from different companies, simply hedging yourself against losses or periods of red. It doesn't make sense overall as an investor. So I don't necessarily diversify as far as for spreading out across like random industries. I do like to have my risk managed. I can say that. So I like to have a decent amount of exposure, because I like to have definitely no more than 10, but I like to have like 5 that I'm actively watching or trading in and out of, because I don't unless you just have like a absurd amount of money, or you have like a team or something like that. I don't know how people manage, like especially if you're short term. I don't know how people manage like portfolios of 20 or 30 stocks. Like if you're long term, you're just putting money in there and you're letting it sit for 10, 20 years. Yeah, that's easy. But if you're actively moving in and out of positions, 20 or 30 for me, it can be a bit overwhelming. So I try and keep my positions down. I don't recommend being all in on anything for a number of reasons. And I think this is what led to a lot of the confusion and a lot of the frustration when we have these corrections that we've always had and will continue to have, is when people go all in on something because they anticipate that it's going to go to the moon within like the next week or something. We're going to see periods of frustration if there's a correction in that time period, because if you are all in, you haven't left yourself any money on the table. So like I know I've been saying average down for months and months now, but if you're all in, you don't have the money to average down, or if so, you can't do so effectively. So this is going to make sure that you're pretty much always in the red as a correction, or as that period that we're climbing back up, or that consolidation period, which can last for months. You're going to be in the red the whole time, and you're going to be frustrated, and you're going to assume that it's dead, and you're going to say, okay, well, maybe I need to trade out of this. And then, of course, as soon as you do, it takes off. Now, of course, if you're a long term and this is like a 5-year play for you, 10-year play for you, and this is across the board, then I still wouldn't say go all in, but you can have a more aggressive approach. And because you're not necessarily worried about what happens in the long term. So in that correction period, you're not going to say, okay, let me average down more aggressively, unless you're just trying to increase your overall coin count. But overall, over the course of the next 5 years, 10 years, of course, you'll have more shares, more coins, and that's going to ultimately determine your profit margin and your leverage. So if you're in that long term period, then of course you can kind of have like that leeway to play with. But this is primarily geared toward more of my short term. Even long term, I still wouldn't go all in, just because of a lot of like hedging yourself against risk. There are a lot of variables in the crypto market that we don't know yet. Like we don't know what the regulation is going to be like. We don't know if they're going to have a special crypto tax. We don't know if there's going to be a Fed coin. There are a lot of unknowns in the market right now. And of course, the market is growing very rapidly. And I said this on one of my lives recently. There hasn't been, as far as I know of, and I've done some research like on when I was, especially when involving like gold and silver and different crashes and corrections, and countries backing themselves and changing their currencies based off of like inflation. I have not seen a unit of measure that that was like necessarily out of the government's control, or that they didn't have complete control over. So we are in complete new territory right now. Um, and it's really hard to say which way they're going to go, because especially now, I do believe that we are leaning toward a system that wants more control. So and the crypto market in general is like the exact opposite of that. So it's very likely we can see a Fed coin, or just some type of slick way that they can increase the exchange rate out of different cryptos into the Fed coin or into the dollar. Like there's a lot of ways that this can go. So I definitely wouldn't say that you should be all in on certain investments. Now, you can definitely have your favorites, because I do. It's in the tech industry. Overall, I have my favorites as far as for innovation, or if it's just based off of the leader of the company and I believe in their vision. You certainly have your favorites that you can be more heavily invested into, absolutely. But I would never say go all in, or just blindly invest into a company without having like a plan and knowing whether you're short term or long term, how you're going to take profits, hedging, and stuff like that. So I wanted to clear that up because I know that there's been a lot of misinformation in the communities, and I'm going to do my best to clear up some of that. I'm going to release some videos this week, and I'm going to clear up a lot of the misinformation that's been placed in the community. But that's a big one there. And as far as for me personally, I would, and this is not financial advice, by all means, do what you want. But as for me personally, I wouldn't do such a thing. So I hope that this kind of clears that up for you guys. And I wanted to just address this in a separate video from all the other ones, because I believe it's very important, long-term and short-term, because you can get yourself in serious trouble if you are doubling and tripling down all in one position. Because more importantly, if you don't have money for anything else, leave yourself money to average down. Like if you don't save money for anything else and you have to go all in, at least leave something on the table to average down, because that is going to be very crucial as far as for not only share count, but also giving yourself the leverage to take profits at lower levels or exit a position if it doesn't work out to your liking. So if all else fails, at least do that. Thank you. I appreciate all of you. Until next time.